Hi, my name is Jack Lundin. I'm the president and CEO of Bluestone Resources, and on Tuesday, February 22nd, we just released the results of our feasibility study on our flagship gold and silver project, which is the Cerro Blanco project located in southern Guatemala. Over the next 10 minutes, I will be walking the audience through the results of the feasibility study, as well as outlining our pathway to production. Throughout the presentation, I will be making forward-looking statements, so please go to our corporate website to look at our disclosures in more detail. Cerro Blanco at a glance is a high-grade, near-surface deposit that's capable of producing over 300,000 ounces of gold and 1 million ounces of silver during its peak production years. We're contemplating a mineral resource of about 3.1 million ounces of gold and about 14 million ounces of silver. Because of its high-grade nature and near-surface orientation, this project has the capabilities of producing at a low or first quartile all-in sustaining operating cost. Before jumping into the results of the economics of the feasibility study, I would like to just demonstrate and show our commitment to Guatemala. Now, we are a Canadian-based junior gold company. However, our focus is exploring and advancing opportunities within Guatemala and sharing those benefits with the local Guatemalan economy. We will be generating over 1,100 jobs during the construction phase, and that will balance out at about 500 jobs during the operations phase. Economic contributions through taxes and royalties will total about $300 million US over the life of the project. However, per year, in terms of labor, energy, material, and other sources for services and materials, will be contributing about 160 million US per year to the Guatemalan economy. So this is a significant economic driver for us, and we're very pleased and excited to be advancing Cerro Blanco in partnership with Guatemala. So now this slide is showing the high-level results of the Cerro Blanco gold project. What you can see here starting from the left side of the slide is we're contemplating an initial capital number of around 570 million US to bring this project into the operations phase, and at an all-in sustaining cost of around $630 an ounce, which I'll walk you through in the next slides. You can see that this is going to generate very robust economics. Throughout the life of the project, when you consider sustaining and closure costs, we will be spending about 750 million US dollars on capital items throughout the project's life. In the center of the screen here, you can see the high-grade nature of this deposit demonstrated by that 2.0 grams per ton gold. So that's over the first 10 years of the mine life, we'll be generating serious, significant high-grade results. Peak production will average around over 300,000 ounces of gold per year, but our top year will get nearly 350,000 ounces of gold, and you'll see that in a later slide as well. Over the life of the project, we will be recovering about 2.6 million ounces of gold, which is very exciting for us because it gives us the opportunity to generate very strong free cash flow, which you'll also be able to see later on in this presentation. So now to the right-hand side of this slide, you can see the economic results, generating an after-tax NPV at a 5% discount of over 1 billion US dollars, which translates to about a 30% IRR and a rapid payback of just 2.2 years. These economics were ran at a gold price assumption of $1,600 an ounce and a silver price assumption of $20 an ounce. Some of you may recall that in 2021, we came out with a preliminary economic assessment on the Cerro Blanco project, and that had an initial capital of 550 million US. We were able to come up with some significant savings and some optimizations which offset a lot of those cost increases that we've been seeing due to inflation, energy, and logistics and supply chain disruptions. So all in all, this slide, what you can see is starting at around 550 million from the PEA, we've made some savings and there has been some cost increases, but we're about 570 million now contemplated for the initial capital during our feasibility study. Some big ticket items there. We're now including a camp for our expats that will be living at the project site. We were able to reduce the size of the processing facility by 20%, so there's significant savings there. However, we did increase our ramp up for the project. So in the PEA, we were contemplating a 2-month ramp up, whereas in the feasibility study, we've got a 5-month ramp up. And so that does increase our costs over time when you're adding 3 months more to the project timeline. This slide here is showing our operating cost buildup. So on the left side of the screen, you can see the pie chart that shows our operating cost on a per ton milled basis. And then on the right side, you can see our operating cost on an all-in sustaining per ounce of gold payable. So walking through the left-hand side here, you can see G&A costs of about $3.40 per ton. So this is general service departments that work to support the mine, i.e. security, health and safety, environment, human resources. All of those non-technical departments make up that $3.40 per ton. Moving over to the mining, you can see that we've got $10.42 per ton milled. However, when you're looking at a mining cost, it's much more common to do it on a per ton mined because the material required to move, so both waste and ore, is what builds up that mining cost. So really we're looking at about $2.50 per ton material to be mined. Now with the processing, this is a pretty simple flow sheet. We are employing a normal crush, grind, leach, and CIP to produce 100% doré bars. So that cost you can see is about $13 per ton milled. And lastly, site services, which includes the camp, catering, and about $1.50 per ton of that is attributed to our water treatment facility. So we have a very robust tailings management and water treatment strategy for this project to ensure that we're working on a pathway to more sustainable mining in the region. On the right side of the screen here, you can see our buildup that gets us to $630 an ounce gold. And I won't spend too much time there, but what you can see is that is net of silver credits. So we remove about $80 per ounce in that all-in sustaining cost, which is what makes us in the first quartile of the industry for low operating cost. A little bit more detail on the project itself. This will be a conventional open pit mining and processing project. So we're using truck and shovel. We were able to optimize our mine plan, optimize our pit development so that we could increase the size of our mining fleet, which means we'll have a higher mining rate each year. And that's really what justified us to be able to move the processing facility from a 5 million ton per annum to 4 million ton per annum operation. The last 4 years of this 14-year mine life will not include any mining. This is where we will be feeding lower grade material through the mill. And as I mentioned, standard crush, grind, leach, CIP flow sheet, which means we'll produce 100% doré bars, no con in this operation. This is a picture of the block model in situ, which really shows the robustness of this project because you can see that it's a near surface deposit, and because the mineralization is tightly contained, the mill will, or the project will actually have quite a condensed size footprint. The final pit dimensions for this open pit will be about 1.1 kilometers north to south and about 600 meters east to west. Here's a 3D rendering of our process flow sheet, and what you can see is that it is a simple flow sheet. However, to the bottom left of the screen, you can see a unique aspect to our project is because we will not be utilizing wet tails in this operation. We will be dehydrating our tailings and creating a filtered tails or a dry stack tailings facility. That does come at an extra cost, but it also puts us at the forefront of responsible mining by using this advanced technology. Tailings management and water management are critical for us, and we were able to, through our feasibility study with advanced engineering work, improve our water treatment, our water management, and our tailings management strategy. And this slide demonstrates some of those tactics that we put in place for this operation. So dewatering wells through the periphery of the pit, and then dry stack or dehydrating the tailings in a filter plant to ensure that we're minimizing our footprint around the operation. Here is probably the most exciting slide on our presentation, which shows the production rate of gold throughout the life of this project. So what you can see is we're able to get into the high grade zones early on in the mine life, and therefore we're going to be generating over 300,000 ounces of gold per year on average in those first 4 years. Average annual production will be about 240,000 ounces of gold per year for those first 10 years. And this is going to be generating significant free cash flow, about 230 million US per year in free cash flow to be generated from this project because of that high grade, low cost nature of this project. This slide shows our leverage to gold price. So we ran our economics at $1,600 an ounce, and what you can see is it generates very robust economics, 30% IRR, rapid payback of about 2 years, and a $1 billion NPV. If you use today's gold price, those economics go through the roof, and that's why we're so excited and so motivated to keep advancing this project in the manner that we have been. And lastly, the catalysts. We just released our feasibility study. We're going to be starting on a key piece of infrastructure, construction of a bridge in the coming quarter. So we're excited to be advancing this project. We already have our EIA approved for that key piece of infrastructure. We did submit our permit amendment application to reflect the open pit project back in November of 2021. And so we're looking to receive a new environmental license before the end of this year so that we can get ourselves into that early works or pre-development phase before the end of this year as well, starting full swing construction in about Q1 or Q2 of 2023. We've got about 15 million US in the bank. So we are looking at putting a project financing package in place, and that will be likely a combination of a debt facility, a silver stream, and whatever equity overhang there may be. However, this being a Lundin Group company, my family is committed to this project and advancing it, all while trying to minimize dilution for our shareholders, and therefore there is a line of credit open from the family to bridge any funding gap that may be required. So overall, we've got a rapid pathway to production at Bluestone Resources with our Cerro Blanco gold project. We've got some of the best economics in the industry today with this project, and we're extremely excited to continue advancing in the pace that we have and even ramping up as we get closer to development and ultimately operation of Cerro Blanco. Thank you very much.